Robert, I want to ask you a little bit about crypto, and this is a quote from you recently. You said, Bitcoin crashing, great news. As stated in previous tweets, I'm waiting for Bitcoin to crash to $20,000. We'll then wait for a test of the bottom, which might be $17,000. Once I know the bottom is in, I back up the truck. Crashes are the best times to get rich. What have you learned from the crypto markets? What are you looking to do now from those crypto markets? And how have those crypto markets shown people maybe what the central banks are doing?
Well, I like crypto because I'm technologically a dinosaur. I barely use my cell phone. So I talk to younger guys, I also know that I consult to like high school kids because they grew up with the iPhone. So I know this one 19-year-old, she started trading at 10 years old on the iPhone. I'm like, what? I can barely go to Amazon on my iPhone. I'm so retarded. I'm a dinosaur. So, and I saw crypto coming out, I heard about it, and then I think it went to 20K. But as you know, it always retraces. All booms, bust. So as soon as it busted, it went down to 1,000. Then I want to test the strength of it because I took technical trading courses. Technical is a volatility. There's fundamentals, which is the income statement, balance sheet, and then technicals. So I took 3 years of technical, and I realized my mother was right. I'm not smart. It's best to stay with oil and gold, slow. But anyway, when I watched the technicals drop, I said, okay, so Bitcoin this is years ago, went to from 20 to about 1, I think, or so. And I watched it, and I watched the momentum pick up. So I came in at 6,000. So I bought at 6, about 60 coins, plus Ethereum. And as you know, your profit's made when you buy, not when you sell. So then I watch it scream up. Everybody's saying it's $1 million. I don't get sucked into the hype because my rich dad taught me early on, your profit is made when you buy, not when you sell.
What does that mean?
You wait for the crash.
Right.
Crashes make the rich richer.
Right. The profit is made when you buy. So you should be buying at those times when there's blood in the streets. You should be buying at those intelligent levels. Right. Okay.
You buy, like right now, Neiman Marcus is having a sale, and Neiman's going to raise their prices. I back off. It's that simple. Okay. It's that logic.
Right. So you're always entering in at the right time into a trade because that's when you make money.
Yeah, you know that. I mean, that's what traders do.
Yeah.
There's traders and investors, and it's important to be both.
Yeah.
You have to know the momentum of markets. That's what looking at charts constantly. But then I've got to look at the fundamentals. What does the income, expense, asset, liabilities tell you? So that's why I created the cash flow board game, so that you could understand fundamentals, income statement, balance sheet.
So why is Bitcoin in a bear market?
It's funny. Crypto over the years has gotten closer and closer to being extremely correlated with the stock market, and particularly growth stocks. So even though stock markets and crypto are in a bear market, you can see crypto is very tightly correlated with the tech stocks.
Correct. Another question I have as a guy who knows nothing about this field, except I have a lot of money in it. How come there's so many thousands of cryptos?
One thing that's happening over the past 2 years is a rebranding of crypto. So instead of thinking of it as just a form of currency, people are thinking of it as a platform to create apps, to run different membership like companies on even. And that whole umbrella is called Web3. So if you think about Web2 is kind of like you can interact with the website, right? Web3 is like the platform is public and anybody can develop on it and anybody can interact with it. So think of it, all these cryptocurrencies as representations of like a public computer that people can go and visit and carry themselves and their identities to each of these different public computers. So it's a little bit high level, but I'll stop there.
Yeah, it kind of reminds me of what we call the .com era. Back around 2000, everybody had a .com company. It was just this .com and that .com, and everybody was chasing these .com companies, and it all came crashing down. So do you think that's going to happen to all these new crypto coins or whatever they are?
I think crypto will continue to remain correlated with growth stocks, but there are so much there are so many funds being raised and so many billions of dollars waiting on the sidelines to fund innovation in the space. So if you bring enough smart people and you bring enough money to any category, you're going to see some really good things come out of it. And obviously the hard part is keeping up to date with the rapidly changing environment. I mean, over the last year, we've seen like 3 bull and bear market cycles with different innovations coming out and then kind of fading back. But there are a lot of promising things that have come out that are actually actively being used. And the big difference this time is there is a connection to the real world. So there's 2 things that are something I want to talk about. One is the off ramps and on ramps. So actually using the crypto you use, right, to swipe a card to earn interest on it. You can, like, for example, borrow money against getting a car loan, then depositing it into crypto, earning an interest rate on a stable coin, and then getting a free car, essentially, because the rate of return of the interest is greater than the monthly payments you need for the car. So these are things that you teach, but in different formats. You buy a home, you get rental income, and eventually you pay off the home, right? So these are like things that are happening in the real world are getting digital representations on in crypto, and that's called DeFi, or decentralized finance.
Will all the coins survive?
No, 99% of the coins will probably be worthless, right? So there are very few coins that are actually building real assets and real value and actual product market fit. But all the other coins are just cash grabs, right? They're just copies and clones of each other. So it's very important to know which coins are the real life, like trying to do something for the world coins, and what are the like projects that are just there just to make money.
Gold and silver stays there on this whole thing, and I still own quite a bit of Bitcoin and Ethereum, but I'm waiting for the price to come down before I buy more, take another position in both Bitcoin and Ethereum. I just want people to know that, to don't think, because I get promoted all the effing time. You got to get in on this one, or you got to get in on that one. This one's going to go to the moon. You know, I'm an old man. I've heard this bullshit so many times over all these years in real estate, stocks. So how does a person find out more? I mean, so for somebody like me, it's best I not get into it because I'm not tech savvy at all.
I think one thing to know is anytime you have a new technology and a lot of opportunity, you're going to see a gold rush. No pun intended to what you just said, but a lot of people are going to rush in. They're going to create something that may or may not work, and people are going to speculate. So what's happening right now is there's a ton of money just coming in as speculation. You see the Gen Z people just like see other people get rich and they want to dive in too, right? They see like Dogecoin go up and like, oh my gosh, I got to get it. It's going to go to the moon. But that's not driven by actual technology or actual product like market fit or actual value, right, in the real world. So that's the hard part is figuring out where the value comes and where the product market fit is versus how can I make money on it, right? Because if you focus on what value it brings to the world, then that's the difference.